This is a dramatized story inspired by real debt situations. For educational and entertainment purposes only. Not legal or financial advice.
$71,000. That's what I owed across 7 credit cards at 42 years old, and my wife didn't know about a single dollar of it. My name is Marcus. I'm a construction foreman from Columbus, Ohio. I made decent money, $64,000 a year before overtime. We had a house, 2 kids in middle school, a dog named Biscuit. From the outside, we looked fine. We looked like every other family on our street, but every morning, before my wife Sarah woke up, I'd sit in my truck in the driveway and check my balances. Chase, $14,200. Capital One, $11,800. Discover, $9,400. A Citi card I'd opened 3 years ago to cover a transmission repair, $7,100. A store card I barely remembered opening, $4,600. A personal loan from a credit union that had ballooned into $13,900. And a second Capital One card I'd opened when the first one hit its limit, $10,000 even. 7 accounts, $71,000. And my minimum payments alone added up to $1,847 a month. I want you to really hear that number. $1,847 a month, just to stay current, not to pay anything down, just to keep the calls from starting. Sarah thought we were tight on money because of the mortgage and the kids' activities. She didn't know I'd been secretly shuffling cash for almost 4 years. She didn't know the work trip I took to Cincinnati 2 summers ago was actually a day I spent driving around because I couldn't face coming home after opening a letter from a collection agency. It started the way it always starts, not with one big catastrophic decision. With 100 small ones, 2019. The roof on our house needed replacing, $11,400. We didn't have it saved. The mortgage was already stretching us thin, and I told myself putting it on the Chase card made sense. We'd pay it off over a year. 12 months, easy. Except 12 months later, I'd only paid about $2,000 of it off, because in those same 12 months, our furnace died. My truck needed brake work and new tires, and Sarah's mom had a health scare that meant 3 trips to Cleveland and 2 weeks of Sarah missing shifts at her part-time job. I was juggling. I told myself every person in America was doing the same thing. I told myself we were almost out of it. Then 2020 hit. I won't even get into everything that happened, but I will tell you that 6 weeks of reduced work hours, plus unexpected school costs when everything went virtual, put another $9,000 on the cards before I had time to think straight. By 2021, I was doing balance transfers to promotional 0% cards like it was a second job. That felt smart at the time. Move the balance, pause the interest, get a little breathing room. What I didn't calculate, what I didn't want to calculate, was that I was also spending on those same cards every month. So the balance never actually went down. It went sideways at best. And when those promotional periods ended, the interest came back at 99%. By early 2023, I had maxed out 4 of the 7 accounts. My credit score, which had been around 7 and 10 2 years earlier, had dropped to 581. I know that number because I checked it in a gas station parking lot on my phone and sat there for 20 minutes before I could drive. Then came the Thursday night in March. We were at our kids' school. Spring fundraiser dinner, the kind of thing you pay $40 a plate for bad chicken, and a raffle you never win. Sarah handed me the card to pay. I handed it to the server. She came back looking uncomfortable and said, quietly, that it had been declined. I tried a second card. Declined. I tried a third one and it went through, barely, because I'd made a payment on it 2 days earlier, specifically, so I'd have a little room. Sarah looked at me from across the table. The kids were distracted. But Sarah was watching my face, and she knew something was wrong. Not just tonight, wrong. Something deeper. In the car on the way home, she asked me what was going on. I said it was a banking glitch. She didn't push it. But she didn't believe me either. I could see it. That night, I couldn't sleep. I lay in the dark, running numbers in my head that never came out right. We were bringing in combined about $78,000 a year. Our mortgage was $1,120 a month. Cars were $680 combined. Utilities, groceries, insurance, another $2,100 easy. The minimum card payments, $1,847. That was $6,047 a month in fixed obligations on a take-home of roughly $5,200. I was $847 short every single month before we bought a single grocery item. I had been covering that gap with whatever card still had room, and the room was almost gone. I started doing things I am not proud of. I took a $4,500 cash advance on the Citi card at 29. 99% interest, the absolute worst way to borrow money, just to make payroll on a small side job I was running. I went to a payday loan place on Morse Road and borrowed $800 at what turned out to be an annualized rate of 391%. I paid that back in 2 weeks, which felt like winning, but I'd spent $127 in fees to borrow $800 for 14 days. That's not winning. That's drowning and calling it swimming. I missed 2 minimum payments on the store card because I genuinely lost track of it. 2 missed payments in a row. My already damaged credit score dropped another 40 points. The account got flagged. I started getting calls. Not 1 or 2 calls, 7, 8, 9 calls a day from numbers I didn't recognize. I let them all go to voicemail. I deleted the voicemails without listening to them. I told myself if I didn't hear the words, they weren't real. Sarah found one of the letters. I'd been having the mail forwarded to a P.O. box I'd rented. I know how that sounds, I know. And I'd missed one envelope from a collection agency that had come to the house. She found it on a Saturday morning when I was at a job site. She called me. Her voice was completely flat. Not angry, not crying. Flat in a way that scared me more than either of those things. "Marcus, what is this?" I drove home. I sat across from her at our kitchen table. And I told her everything, every card, every balance, every transfer, every call I'd ignored, the P.O. box, all of it. She didn't speak for a long time. Then she said, "How long?" 4 years. Another long silence. "We need to fix this," she said. Not, "I'm leaving." Not, "How could you?" Just, "We need to fix this. I didn't deserve that grace, but she gave it to me anyway." We spent that whole weekend at the kitchen table with every statement printed out. It took us 2 hours just to organize everything into a single list. $71,000. Laid out in black and white, account by account. Seeing it all together was different from carrying it in my head. It was worse in some ways. The number didn't lie, didn't soften itself, but it was also the first honest thing I'd done with this debt in 4 years. There was something almost like relief in just looking at it. Sarah's cousin had gone through a bankruptcy a few years before, and she suggested we at least talk to an attorney. I resisted that word, bankruptcy. I'd grown up hearing that word the way people say cancer, quietly, like it might be contagious. My dad worked union construction his whole life, and he told me once that a man who files bankruptcy is a man who didn't keep his word. That belief had been sitting in my chest for 20 years, but I made the appointment. The bankruptcy attorney's name was Carol. She had an office off of High Street with framed licenses on the wall and a box of tissues on her desk that I figured got used a lot. She did not make me feel like a failure. She asked me questions, looked at the numbers, and explained my actual options, not the ones I'd been half reading about at 2 a.m, but the real ones. The 2 paths she walked me through were Chapter 7 and Chapter 13. She was careful to explain that she was giving me general information and that my specific situation would determine what actually made sense, and that I should consult a licensed professional, which I was doing, before making any decisions. Chapter 7, she explained, is what most people picture when they hear bankruptcy. It's a liquidation. A federal court wipes out most unsecured debt, meaning credit cards, medical bills, personal loans. The process typically takes 3 to 6 months. The catch, you have to pass what's called a means test, which looks at your income relative to your state's median. If you earn too much, you may not qualify. Chapter 7 also stays on your credit report for 10 years, which sounds catastrophic, but she pointed out that my credit score was already at 541 by that point. It had dropped another 40 points since I last checked. So the idea that I was protecting some pristine financial reputation was already out the window. Chapter 13 works differently. It's a reorganization, not a liquidation. You propose a repayment plan, typically 3 to 5 years, that the court oversees. You keep your assets, including your home, which is the part that mattered most to me. The mortgage was current. Losing the house because of credit card debt felt like a different category of failure. I couldn't let that happen to Sarah and the kids. Chapter 13 allows you to catch up on secured debt like a mortgage while paying what you can afford on the unsecured debt. It stays on your credit report for 7 years instead of 10. She also walked me through alternatives I'd already tried and failed at. Debt consolidation, taking out one loan to pay off multiple debts, requires decent credit to get a rate that actually helps. At 541, I wasn't getting an offer that made mathematical sense. Debt settlement, where a company negotiates with creditors to accept less than you owe, can work but comes with serious risks. The forgiven amount may be taxable as income, your credit takes severe damage during the negotiation period, and not all creditors will settle. She'd seen people spend 2 years in debt settlement programs only to get sued by a creditor who wouldn't play along. Credit counseling through a nonprofit agency, she said, was worth considering for people with debt under a certain level or with more stable income. They can negotiate lower interest rates through what's called a debt management plan. But given the scale of what I was carrying and the damage already done to my FICO score, she was honest. That path would likely take 7 or more years and would require income stability I didn't currently have. She also mentioned something I hadn't thought about: the IRS. If I settled any of this debt for less than I owed, the forgiven portion could show up as taxable income. A $20,000 settlement could mean a $5,000 tax bill I wasn't expecting. That's how people end up trading credit card debt for IRS debt, which is a much harder problem, based on everything. The amount, our income, the mortgage I wanted to protect, the fact that my credit was already severely damaged. She thought Chapter 13 was worth a serious look. Not a guarantee, not a promise, just a structured path forward that kept the house in the picture. I want to be clear about something here, the same way Carol was clear with me. None of this is legal advice. Every situation is different. The right option for me might be the wrong one for you. What she gave me that day was information, not a prescription. And I'm only sharing it because I spent 4 years not having it, and I believe not having it made everything worse. We filed for Chapter 13 6 weeks later. The automatic stay went into effect immediately. That means the collection calls legally have to stop. After years of my phone being a source of dread, the silence was almost disorienting. The repayment plan was set at something we could actually manage. Not comfortable. Nothing about this was comfortable, but manageable. For the first time in 4 years, I knew exactly what the number was. I knew exactly what the plan was, and I knew exactly when it would end. My credit score will not be good for a long time. I know that. We are not buying a new car or refinancing anything for years. The Chapter 13 will be on my report until I'm 49. I'm not pretending that isn't real. But here's what else is real. I sleep at night now. Not great sleep. I'm a construction foreman with 2 teenagers. The sleep was never going to be perfect. But I sleep. I'm not doing math in my head at 3 a.m. I'm not checking my phone in the driveway before I face my family. I don't have a P.O. box anymore. Sarah and I talk about money now. Every Sunday evening, 20 minutes, we look at what came in and what went out. It's not romantic. It's not fun. But it's honest, and honest turns out to be the only thing that actually helps. If I could go back to 2019 when that roof cost $11,400 and I didn't know what to do, here is what I would tell myself. Call a nonprofit credit counseling agency before you touch that card. The National Foundation for Credit Counseling has certified counselors who will look at your situation for free or very low cost. One phone call in 2019 might have saved me 4 years and $71,000 of compounding disaster. I'm not out the other side yet. I'm in the middle of a 5-year plan. But I'm in a plan, and that is a completely different thing from being in a spiral. If any part of this story sounded like your life, the shuffling, the ignoring, the calls, the lying to the people you love because you're too ashamed to say the number out loud, please, start with information. Not a payday loan, not another balance transfer. Information. Talk to a nonprofit credit counselor. Consult a licensed bankruptcy attorney for a free consultation. Most of them offer one. Lay all your numbers out on a table the way Sarah and I finally did. The number doesn't get smaller by staying hidden. It never did. Get the free debt checklist in the description. It walks you through exactly how to list your balances, calculate your minimum payment trap, and what questions to ask a credit counselor. Link is right below.